All right. Welcome to your deep dive. Today we are going to be looking at investment objectives.
Investment objectives.
Which, you sent over a lot of great material, and we're going to try to
Break it down.
break it down for make it easy to digest. And hopefully by the end of this, you'll
feel a lot more confident.
Yeah, you'll feel confident. You'll know exactly what we're talking about.
Yeah.
So yeah.
A lot of people think that investing is this really complicated thing that's only for Wall Street experts.
Oh, absolutely.
But the truth is that anyone can learn the basics and start making smarter decisions with their money.
Exactly. And that's what we're here to do today.
So let's dive in.
All right. So first things first, what exactly are we talking about when we say investment objectives?
Well, it's basically like setting a destination for your money.
Okay.
Where do you want your money to go? What do you want it to do for you?
Okay. So it's not just about making as much money as possible.
Nope. It's about figuring out what's important to you.
Right. And aligning your investments with those goals.
Exactly.
Now, in the material you sent over, there were a few common objectives that kept coming up.
Oh, yeah, definitely.
Capital preservation, income generation, capital appreciation speculation, and tax minimization.
Okay, so we've got a lot to cover.
Let's start with capital preservation, because I think a lot of people can relate to that.
Oh, for sure.
What if you're someone who's just terrified of losing money?
Mm-hmm.
Is capital preservation the way to go?
Absolutely. Capital preservation is all about protecting your principal.
Protecting your principal.
Meaning, the money that you're starting with, you want to make sure that it doesn't lose value.
Okay.
Even if it means sacrificing some potential growth.
Right. So it's like playing it safe.
Exactly. It's the foundation of a solid financial plan.
Okay. So what are some investments that would fall into that category?
So we're talking about things like savings accounts, those super basic, certificates of deposit. Those are CDs and U.S. Treasury securities.
So those are considered the safest of the safe?
Yes. Very low risk, very reliable, but also typically lower returns.
Got it.
Now, if you are looking for a bit more growth potential, but still want to keep things relatively conservative, then you might consider income generation.
Income generation. So that sounds like it might be a good fit for retirees who are looking for a steady stream of income.
You got it. That's exactly right. It's all about creating a regular flow of cash from your investments.
Okay, so what would be some examples of income-generating investments?
Well, bonds are a popular choice. They pay you a fixed interest rate over a set period of time.
Okay.
Then there are dividend-paying stocks. These are companies that share a portion of their profits with their shareholders.
Oh, interesting.
And of course, real estate can also be a good source of income through rental payments.
Makes sense.
Oh.
Okay, so we've covered capital preservation and income generation.
Mm-hmm.
Now let's talk about capital appreciation, because this is where I think a lot of people get excited.
Oh, yeah. Capital appreciation is all about growing your money over the long term.
Right, so this is for people who are okay with taking on a bit more risk.
Exactly. They're looking for higher returns, and they're willing to ride out the ups and downs of the market.
Okay, so what kinds of investments fall under capital appreciation?
So here we're talking about growth stocks. These are companies that are expected to grow at a faster rate than the overall market.
Okay.
Mutual funds can also be a good option here. They allow you to invest in a diversified portfolio of stocks or bonds.
Right, diversification.
Very important. And then, of course, real estate can also appreciate in value over time.
Makes sense. All right, so now we've got to talk about speculation, because this one sounds a bit...
risky.
Yeah, risky. I mean, it's right there in the name.
It is speculative. It is high risk, but also potentially high reward.
Okay, so for people who like to live on the edge...
Pretty much. So think about things like cryptocurrencies, venture capital investing in startups.
Okay, so definitely not for the faint of heart.
Not at all. These are very volatile investments, and you could lose a significant amount of money.
All right, so let's move on to our last objective, tax minimization.
All right, so nobody likes paying taxes, right?
No, really.
So tax minimization is all about using legal strategies to reduce your tax burden.
Okay, so this is something that everyone should be thinking about, regardless of their other investment objectives.
Absolutely. There are tax-advantaged retirement accounts like 401ks and IRAs.
Oh, right.
Tax-free municipal bonds. Certain real estate investments can offer tax benefits.
So it's worth exploring all those options.
Definitely.
Now, okay, this is where it gets really interesting, because I'm assuming that my ideal objectives are going to depend on a bunch of different factors.
Oh, yeah. There's no one-size-fits-all approach here.
Okay, so what are some of the factors that I need to consider?
All right. Well, first of all, your time horizon. How long are you investing for?
Oh, okay.
If you're investing for the long term, Like for retirement, you can afford to take on more risk.
Makes sense.
But if you're investing for a short-term goal, like a down payment on a house, you need to be more conservative.
Okay.
Then there's your risk tolerance. How much volatility are you comfortable with?
Right. Some people are like okay with seeing their investments go up and down a lot.
Exactly. And others are not. So that's something to really think about.
Yeah, for sure. And then, of course, there are your financial goals. What are you actually saving for?
Right. Are you saving for retirement, your kids' education, a dream vacation?
It's all got to tie back to that.
Exactly. And then finally, there are your liquidity needs. Do you need to be able to access your money quickly?
Right.
Or can you tie it up for the long term?
That makes sense.
Mm.
All right. So it's not just about picking one objective and sticking with it.
No, not at all. You can blend different objectives together to create a portfolio that really aligns with your unique needs and goals.
Okay. So like you could be aiming for both capital appreciation and income generation.
Exactly. Or you might prioritize capital preservation for a portion of your savings while pursuing more aggressive growth with the rest.
So diversification is key.
Absolutely. You don't want to put all your eggs in one basket.
Right. Spread that risk.
You want to spread your investments across different asset classes, stocks, bonds, real estate, the whole shebang.
So if one part of your portfolio is down, another part might be up.
Exactly. That helps to cushion the blow and reduce your overall risk.
Makes sense. All right, so to wrap things up, I think the key takeaway here is that understanding your investment objectives is the first step towards making informed decisions about your money.
It really is. It's about taking control of your financial future.
So now that you know about all these different objectives, I want you to think about your own financial goals and risk tolerance.
Yeah, what matters most to you?
Which objective resonates most with you? And what's one small step you can take today to align your investments with your goals?
Yeah, get started.
This has been your deep dive into investment objectives. Hopefully feel equipped to start building your own financial roadmap.
Absolutely.
We'll catch you next time.
See you later.